But let's say you have mom and pop and they've got a 401k and they got $100,000 in it. Would you ever recommend that somebody consider an investment in Bitcoin or Ethereum or something like that?
Yes, it depends what age it is and what you're trying to achieve. And right now it's difficult to put in a 401k because there's no ETF or simple vehicle. You can buy that, the Grayscale Trust, it trades at a big premium. But let's say you can find 20 grand yourself or 25 grand yourself. And think of it in these terms. If you lose half of your money, if that's too painful, don't do it. If you think I can lose 12,500, but I can make 200,000 or 500,000 over the next 5 years, that's the kind of bet that you have. So it's really going to enhance your portfolio. The younger you are, the more you should put in it because the more risk you can take. The older you are, the less you'd put in it, but you might have some in because it's going to help offset other issues you might have.
So I have a question. There's 21 million Bitcoin. Is it theoretically possible that that could be the money for the rest of the world? Can it keep expanding out? I mean, I know that thing called Satoshis, but I don't know what they are. But can it keep dividing?
Yes, well, it divides down to 8 decimal places. And the 8 decimal place is a Satoshi. So it's divisible, which means that it's expandable. So, you could theoretically get to 1 Satoshi equaling $1. I mean, that's a huge number. The reality is we talked about before about this network effects with this, but it also applies for institutional money managers and corporate treasurers, because if they have it on their balance sheet, they're outperforming everybody else. So it encourages other people to get involved because they need to catch up. Then the market cap goes up. So it goes from 350 billion to $1 trillion. Now at $1 trillion, it means BlackRock can get involved. So they get involved and the market cap goes up to $2 trillion. And that brings in the sovereign wealth funds and it goes up to $5 trillion. And as it broadens out in its number of users, the volatility comes down and it becomes a more usable form of money. Right now, it's basically a store of value plus a call option on the future of financial technology, which is why we've got such this racy trajectory that it has. Eventually that trajectory will flatten out and will look much more like gold, which is a stable store of value. But right now we're at the exciting part where we get 2 parts of this, the store of value and the future of technology. That's amazing.
And one of the arguments early on, I don't know if it's still an argument today, is that, Bitcoin is not, at some point, Bitcoin is going to get too powerful or too much attention and the governments aren't going to like it and the government's going to try to shut it down. Is there any reality to that?
So currently the regulations are going the other way. They're making it very clear that they want to regulate the exchanges, make it viable. What are you going to tell BlackRock once they've got it on their balance sheet? I'm sorry, we're going to ban this now. That's highly unlikely. But let's say all the IMF get together and said, this is destabilizing the fiat currency world. Okay. So then another country is going to say, oh, well, we're going to allow it. Let's say the Cayman Islands. Oh, no, come here with your cryptocurrency. So they attract capital. So that game theory means that if it's such a strong, hard asset, somebody's going to accept it. Also, if you think about the game theory of central banks and their reserves, one of these Latin American countries who've always had problems with currency depreciation is going to put it on their balance sheet. And it's going to give them a hard currency in their basket. And their currency is going to appreciate. And somebody else is going to look at that and go, we can do this too. And before you know it, it gains central bank adoption. So it's a really interesting path. And I think it's a probable path as well. Over what time horizon? I'm not sure. Let's call it 10 years that we start to see central bank government adoption at various levels. And then we'll see whether it really threatens the bigger currencies.
Right. If I could put it in really simple terms, is the problem with the dollar or any fractional reserve money currency is that you're incentivized to spend it. And it goes down in value the longer you hold it.
Correct.
And so what that does is it causes people to spend money or get into debt as quickly as possible because the money is going down. Its value is dropping. It's not a store of value.
Yeah, and you can look at that in a number of ways. If you look at inflation-adjusted wages, median wages in the United States, they've basically stayed the same since 1974. But other things have got more expensive versus wages. So people have taken debt to fill that gap. So people feel there's something going on. They don't really understand it because it's not the dollar falling against the yen or the euro. It's all of them going down because they're all printing money. So that's why gold keeps stair-stepping higher over the years. It's basically holding its value and reflecting that all of the fiat currencies are going down in value. So I actually follow gold versus a basket of 27 currencies because that shows you what it's like as a world currency. And I think of gold as a world currency. Works perfectly because it holds its value as these currencies keep printing, etc. So, and Bitcoin works perfectly in that, but it has, as I said, the racy upside of the technological output.
So we don't give recommendations, as you know, because that's not our job out here. But let's say you have mom and pop and they've got a 401k and they got $100,000 in it. Would you ever recommend that somebody consider an investment in Bitcoin or Ethereum or something like that?
Yes, it depends what age it is and what you're trying to achieve. And right now it's difficult to put in a 401k because there's no ETF or simple vehicle. You can buy that, the Grayscale Trust, it trades at a big premium. But let's say you can find 20 grand yourself or 25 grand yourself. And think of it in these terms. If you lose half of your money, if that's too painful, don't do it. If you think I can lose 12,500, but I can make 200,000 or 500,000 over the next 5 years, that's the kind of bet that you have. So it's really going to enhance your portfolio. The younger you are, the more you should put in it because the more risk you can take. The older you are, the less you'd put in it, but you might have some in because it's going to help offset other issues you might have.
And we were just having a discussion here with some of the members on our team, and the young guys were liking Ethereum, and older guys are liking Bitcoin.
Yeah, and that's narrative arc. So Bitcoin is an easy narrative because one step from gold, you kind of understand digital gold. Okay, easy. Ethereum is like the internet of money. It's like a platform. So younger people are more adoptive of the whole disruptive technology that Ethereum represents. Bitcoin does too. It'll have many of these attributes as well. But Ethereum is that. And I'm very bullish on Ethereum because I think the whole system is changing to this new internet of value. I think real estate will be tokenized. You know, we're talking about it here, for example, on 7 Mile Beach.
Say that again. That's something near and dear to my heart.
So real estate will be tokenized, and this is something great. So right now,
what does that mean?
Let me explain. So right now on 7 Mile Beach in the Cayman Islands is expensive apartments. The average citizen of the Cayman Islands can't afford to buy them. They're sold to Americans and some of the wealthy families here and Canadians and Brits and stuff. Now, you could tokenize it, which means you can have the recorded ownership, your fractional ownership that trades on an exchange. So I can sell my $5,000 investment in a $10 million condo to you instantaneously. What that means is you're a pension fund in the Cayman Islands looking after the general population. You can share in these projects that ordinary people couldn't do. So let's say you're a real estate developer. Well, you can now sell real estate, high-end real estate, to individuals. Because you're not selling one thing, you're not creating a REIT, you're creating something that's instantly tradable. It was kind of like timeshare was, but this is a real ownership, recorded ownership, that I own a share of the property that you've just built. And I can trade it with somebody else instantaneously for money.